Many people are hoping mortgage rates will come down before they buy a home, but will that actually happen? According to the latest forecast, experts say rates will decline, but not as much as a lot of people want. The good news, even if they don't drop substantially, there are still ways to make buying a home more affordable. So how much will rates drop? A few months ago, experts were forecasting mortgage rates dipping below 6% by the end of the year. But recent projections suggest that may not happen after all. While mortgage rates are still expected to decline, projections from Fannie Mae, the Mortgage Bankers Association, and Wells Fargo now show them stabilizing closer to 6.5% by the end of the year. That means if you're holding off on buying a home in hopes of much lower mortgage rates, you may be waiting a while. And if you need to move because of something in your life is changing, like, a new job, a new baby, or a marriage, waiting that long might not be an option. Creative financing options in today's market, since rates aren't expected to decline as much as originally expected, it may be worth considering an alternative financing option that could help you get into a home sooner rather than later. So here are 3 strategies you can discuss with your lender, which we have a list of preferred ones, to see if any of these make sense for you. Number 1, mortgage buydowns. A mortgage buydown allows you to pay an upfront fee to lower your mortgage rate for a set period of time. This can be especially helpful if you want or need a lower monthly payment early on. In fact, 27% of agents say first-time homebuyers are increasingly requesting buydowns from sellers in order to buy a home right now. Number 2, adjustable rate mortgages. Adjustable rate mortgages, or ARMs, typically start with a lower mortgage rate than a traditional 30-year fixed mortgage. This makes them an attractive option, especially if you expect rates to drop in the coming years or plan to refinance later. And if you remember the housing crash, you know that today's ARMs aren't like the risky ones back then. Lance Lambert, co-founder of Resi Club, helps drive this point home by saying that ARM products today are different from many of the products issued in the mid-2000s. Before 2008, lenders often approved ARMs based on borrowers' ability to pay the initial lower interest rate, and sometimes that didn't even check that. Remember the ninja loans? Today, an adjustable rate borrowers qualify based on their ability to cover a higher mortgage payment, not just the initial lower payment. In simple terms, banks used to give loans without checking to see if buyers could afford them. Now lenders verify income, assets, jobs, and reducing risks associated with ARMs compared to the past. Number 3, assumable mortgages. They allow you to take over the seller's existing loan, including its lower mortgage rate. And with more than 11 million homes qualifying for this option according to US News, it's worth exploring if you want or need a better rate. So the bottom line, waiting for a big decline in mortgage rates may not be the best strategy. Instead, options like buydowns, ARMs, or assumable mortgages could make homeownership more affordable right now. So you need to connect with me. I will connect you with a local lender, and we can figure out what works for you. There's a ton of different options when you're talking about seller credits and other things that we can help you get a game plan together to get you in the market so that you can make homeownership possible in 2025.